Ladies and gentlemen, hello and good evening. This is Christopher Aaron. It is December 20th, 2017, and thank you for taking the time to tune into this broadcast. I want to say an early Merry Christmas to you, a Happy Hanukkah, and if you do not celebrate either of those, then a Happy Winter Solstice. We are approaching that time here in the Northern Hemisphere where the light is not present so much visibly. But I do firmly believe that these cycles, these natural cycles, are embedded within us as human beings. And there are cycles that as a species we also follow. So part of the work here is to pay attention to what are the cycles that are visible. We see here this time of year, although the light is not as visible, there are other forms of information I believe that we can gather when we do not have the presence of that visible light. So let us tune into those other forms of information now as we look at the action in the precious metals. We're going to look at both gold and silver, and we'll get back to the classic form of these broadcasts. We've had a few interesting broadcasts over the last several weeks, some interviews and some different formats, but I want to get really back into the bread and butter of this, which is the focus on the charts. We see here the price action in gold, this slow and steady rise from a week ago when we were looking at the bounce after the Federal Reserve meeting, a continued rise, making a new high for this move. It's been slow and steady thus far, and this looks most excellent to me from a technical based perspective. The action that we're seeing in here in gold looks very good from the long-term perspective. We will put this into a better perspective on the charts in a moment. Let's switch over to look at silver, also making another new high for the move here, giving back some of the gains today, but it's this slow and steady kind of price action right now, and this is very healthy. So let's look at the charts as we have done so many times, and we haven't brought up the primary gold chart here in some weeks. So let's take a look at it. And if you're new to this form of analysis, I want to bring up this key for you here and let you know that almost everything that you see here is color coordinated for a reason, and that's so you can get to learn the system that we're using. And the big picture, the most important thing to remember here as we look at the price of gold on the charts is from the bottom in December, another significant bottom here in December of 2016, and it looks like another significant bottom is setting up here December of 2017. We will see. Of course, this price action represented a giant triangle, nearly a 2-year triangle formation here that broke out in August. And what do we see? The strong, you can tell this was a breakout from that 6-year downtrend. Strong breakout, clearly visible on the charts, coming back into the vicinity of the trend line to retest that trend line. So when this breakout first happened in August, I drew this green shading on the charts, and I said anything within this green shading is going to represent a retest of that long-term downtrend. This, thus far, is the most conservative that the price of gold could take as far as beginning a new advance from the breakout. But whether or not it's conservative or aggressive, you have to keep in mind that we are still talking a break of this long-term downtrend and a market that is in the process of changing directions from a falling market, as we saw 2011 and 2015, basing process that's been happening over the last several years, and we are seeing a market that is getting ready to begin a new advancing primary trend. And I will tell you from a psychological basis, I think this, what was it, a 3-month downtrend here after the breakout. From a psychological basis, my entirely empirical data gathering shows me that this retest has accomplished what it needed to accomplish. So let's think about this for a moment. What did a retest need to accomplish? It needed to flush out the last of the holders who were not paying attention to this type of technical action. It needed to so discourage enough people to sell into these lows that they leave the precious metals market. And that is what forms the final low after a retest. This looks very good right now. If you wanted to put me on the spot, I would tell you that I believe the low is in right here, just a few dollars below this 1240 level. Looks like the low is in, although, of course, anything within this green zone has to be considered that retest. It looks to me like the low is in. So what am I expecting now is a rise. Initial resistance here is going to be seen between 1280 and 1290 for this little mini surge. We will probably see a period of backing and filling between 1290 and back down to 1260 or so over the next several weeks and months, corresponding very similar with this period of backing and filling, the final flush here, except this will be a period of backing and filling, building the base now to round out of this retest. And I'll be looking for the break of this 1305 region, this black dashed line, 1305. I will be looking at that to show me that the next retest of both 2016 and 2017 highs is coming. And yes, the 2016 high was a few dollars less than the 2017 high, but functionally these were equivalent. Within $16 or so of one another, functionally this was equivalent. So I'll be looking at the next break here of 1305, the black dashed line, to show me that we are in fact rounding out of this retest. It has washed out all of those who were not paying attention, and we are getting ready for the third challenge of this resistance zone. And I do not think it will take more than three, perhaps a slight backing off, and then a fourth challenge of this zone before gold blasts through. And we are looking at the beginning of a new rising trend, which could last for many years. So I want to challenge you. I believe when we look back at this low that is forming in here, whether or not there's a few more dollars of grinding that have to happen or a double bottom, I want to challenge you to remember this. And I will bring up this chart some years into the future, and I believe we will look back at this, and the people who sold into this low will be kicking themselves. That's why I produce this channel, just to try to show you what is happening on the charts. I can't change the market, but I can at least show you from a technical basis what is happening here. This is once again where I think the next intermediate term high will form, 1280 to 1290, not that far from here, and then we'll be looking at a period of backing and filling to last for several weeks into the new year. Let's look at silver. We have not brought up the primary silver chart for many weeks actually on this channel, and this is an excellent time to do so as we approach the holidays. Silver bells. So what's going on here in the silver market? The first thing to acknowledge is that silver is seriously lagging gold. We can see that gold made a functional retest of 2016 highs. Silver came nowhere near that here in September, barely getting up to 1830 when the high from 2016 was over $21. So silver is lagging. You must appreciate and welcome that if you are a precious metals investor, if you're a silver investor. So we've got a bunch of lines on here and understand what's happening. The most important things to look at here from this long-term bottom. So we're always starting here at the end of 2015 because we have a long-term bottom that came into play at the end of 2015. Major rise, taking out previous resistance levels, major rise in the first half of 2016. And we've just seen a series of waves of up and down, up and down. And we can see the broken trend channels here in the turquoise color, multiple broken channels down, some broken channels as the price was going higher. As a net sum, and we will wrap this up 2 weeks from now once we have the final data for the year, but look at where we are basically for the year. It's been a very flat market, but notice how bad the psychology has gotten here. Some well-known people within the precious metals market have given up here amidst the period of flat prices. And what I'm saying is the end of a very important basing process that is forming here as we speak. So take this as a whole and look at these, pay attention to these thick black lines here. These lower ones labeled initial support between 1570 and 1610, and the upper ones here labeled primary resistance between $18.30 and $19. And if you believe that silver is just manipulated forever and there's no point in charting it, I would tell you then, pay attention to where these manipulators are coming in. Because if this is entirely manipulated, we can see where these manipulators are coming in. Or if this is just market forces, we can see it as well. Look at the highs here forming in 2016 in this region. 2 highs in a row, finally broke out, came back and tested that exact same region. Tested it again. We have a 4th time at this region between 1570 and 1610. A 5th time. The flash crash in which silver fell for about 48 hours below this region and quickly regained it. Negated the breakdown. A 6th test right here several weeks later. And what was this? A 7th test. So we've been outlining these regions in the premium service for buyers of silver to pay attention to this zone here, this initial support. This is not random. So if this is all manipulation, I would just say, how about we pay attention to the manipulation? I'm not discounting that manipulation can exist in this market, but let's pay attention to where it's coming in and let's buy when it's going to end. This looks like a very important low that has just formed here. We look at the upper regions of the resistance level here between $18.30 and $19. 2 times that this acted as support. The support failed here in September 2016. 1, 2, 3, and 4 more times that this region has acted as resistance. So an extremely clear consolidation here happening between these zones. Now, over the short run, we must label this as a new primary, the blue trend line here, primary downtrend from September. This is now 3 months long. So what I'm expecting here is as silver continues to rebound from the support zone over the next several weeks, I think it will run into this downtrend. This should come right around 1690. And we'll probably back off a little bit into the New Year's. And then I think silver is getting ready to bust through this primary downtrend. Where does that leave silver getting ready to make another attempt at primary resistance? Now, if we accept the fact, we look at a lot of leading indicators, if we accept the fact that there are many leading indicators showing that the entire commodity sector is bottoming at 45-year lows, and if you accept that this was an important low, and you see a first initial surge followed by this kind of back and forth action, you have got to place the bias that this consolidation is going to resolve to the upside. It does not mean silver prices are going to 50 this year or next year. But I think within the next 1 or 2 times, and this should happen in 2018, that silver attempts to test this region, it is going to break through there. It will be lacking gold, but a lot of the silver mining equities are beginning to price in this probability. I'm seeing that from some of the stronger names right now. So we have another confirming indicator there. So let's watch very carefully this first test. When this downtrend is broken, the first test that comes here into the new year, I think we are looking at silver getting ready to break resistance and have a significant new surge higher, most likely by mid to late 2018. Extremely healthy price action if you're accumulating into the lows, as we recommend. Looking at the mining sector, what a consolidation. Just compare this to 2016, right, where we had this massive move higher, hundreds of percent higher, giving back about 2/3 of the gain. So huge swings in 2016. 2017 has almost been a complete flatline. That said, there are trends that we are monitoring here We saw a clear series of lower peaks here on the GDX. Clear series of lower peaks shown by the blue line, broken in August. As gold broke its long-term downtrend, came back up, tested initial resistance, and has come back down and has just retested this line 3 times now. So it's been frustrating. It's been a grinding low if you are a precious metals investor. But the point of showing these charts on a regular basis is to know, is this part of the model? Is this part of what could be considered a break of this initial trend, retesting consolidation from a generational low, in which case we could expect that support levels will be holding, and we are trying to time when the next advance will happen. Is that within the model? Or should we get scared out of our positions as these retests are happening? That's the point of looking at the charts. So I will tell you that, this is basically a 20% consolidation here in the GDX. It's been ongoing for a year. Such a tight consolidation, I actually cannot remember the last time that I've seen a consolidation this tight for so long. I can't remember it. I've been studying this market going back into the mid-2000s. So we are approaching a big move here. It's going to take a lot of people by surprise because a lot of people have just gotten tired and sold. But this move is going to surprise a lot of people when it occurs. We're watching these 2 levels here to gauge as this happens. By the way, nice rebound here in some stocks, rising 10, 20, 30% just over the last week as this bounce has happened. Why are we focused on the gold miners a lot here? And I just want to share this with you. There are 2 models that I'm using from a technical basis as to say, why am I focusing on the gold miners so much at this point? And I'm a bull on all the precious metals at this point. I think gold is rounding out of its base. Silver is rounding out of its base. Silver will probably lag gold for 6 or 12 or 18 months. But when we look at the mining sector, there's 2 models here I want to pull up. We look at this one often. This is the mining sector, the gold and silver mining sector versus the broad stock market. And we are looking at the lowest valuation that has ever been seen, ever, in this ratio. For the average gold miner to return to levels that corresponded with the 1980 peak in the precious metal, the average gold miner would have to rise over 3,000% versus the S&P 500 to get back to those levels. So if anyone's telling you here that the precious metals miners are overvalued or something, feel free to share this chart with them. This says otherwise. Now, this could also happen. This could revert to the mean by the broad stock market falling quite a bit. And I bet you it will be some combination of the 2 of those. But you certainly cannot say that the miners are expensive here versus the broad stock market. Ironically, the other thing that the gold miners are the cheapest that they have ever been relative to is the price of gold itself. Here we are looking at that very same XAU index, not versus the stock market, but relative to the price of gold itself. And so this is why I think as gold and as silver are rising over the next 3 to 5 years, it doesn't have to be a skyrocket, but even a return to 2011 peaks or a return to $30 or $35 silver, the gold and silver miners are the cheapest they've ever been relative to the metals themselves also. The average miner would have to increase 680% with no increase in the price of gold to get back to former peak levels. Am I telling you to put all of your capital into the precious metals miners? No, I don't even do that myself. I hold a significant amount of the physical metal because there are times, even as we're looking at a return to historic normal or peak levels over the coming decade, mind you, is when I think this is going to happen. There are going to be periods where the miners underperform, and psychologically, it really helps me to sleep if I have a nice base in the physical metals. and then I'm trying to catch the sale with the volatility in the miners for these massive revaluations that are going to happen. These are ratios that cannot go to zero, and they were the closest to zero, both of these, that they have ever been in the history of data keeping here in the beginning of 2016. So we've seen minor reversions to the mean, and I do mean minor. I mean M-I-N-O-R, minor reversions for these miners, M-I-N-E-R, to get back to the levels that are coming. And mark my words, this is going to happen over the next decade. You must be able to withstand the volatility, though. And we've seen these things can go up or down 20, 30% within a couple weeks, even as they're reverting to the mean. The executive summary. The metals are putting in extremely important bottoms according to the technical model that we are studying here. Gold will see initial resistance between 1280 and 1290 is the highest probability assessment. There should be some backing off that happens after that. We will look at more specific retracement levels in the premium service coming up this weekend. Silver has initial resistance at 1690, that new primary downtrend. We'll be looking at a back off, and then we will attempt to gauge the breaking through that and the testing of primary resistance up in the mid-18s. The gold and silver miners are starting to show signs of life. This is very encouraging. They actually look like they're leading the metals here over the last week since the last Fed meeting. They remain historically undervalued relative to both the stock market and gold itself. That is why I'm focused on it to a significant extent. If the data didn't show me that they were not undervalued, I would not be focusing on them. I do want to thank you for watching, and I wish you and your family all the very best this holiday season. And I encourage you to please take the time as the markets are closed on some of these holidays to rest, take time away from the computer, get out into nature, spend time with loved ones, whatever it is that you find peaceful. I wish that to you. Just wanted to let you know the services that I do offer here. If you are interested, the premium research goes out weekly to subscribers. It covers not only videos like this, which are much longer, once per month, but all of the research as to which miners we are investing in here, as well as more detail on the prices of gold and silver themselves to help time your purchases if you're a physical investor, as well as all of the fundamentals that are happening in the backdrop related to the metals. You can find more on the website. I also work with individuals. I do strategy sessions with individuals. We work on a one-on-one basis, either by voice or by email. When your situation requires an independent, researched perspective from someone who does not sell the metals and may even tell you to sell some of your metals, maybe to change your diversification, maybe wait to buy. So I work with individuals and I help individuals to construct balanced allocations within everything relating to the precious metals and the mining sector. So once again, thank you very much for watching. Enjoy your time away, your time and rest this holiday season, and know that we will be here when these markets begin to pick up in momentum, which I think is very soon, to help you navigate through it.